I'm going to do a monthly recap and a weekly recap. So for the month, the only day I lost money was Friday on the 10th. That's last Friday. I lost money because I was saying how when the data came out, the Michigan inflation expectation, okay, this came out higher than expected. The consumer sentiments, consumer expectation were lower than expected. So when this came out, I was expecting it to be a negative bias for the day, and initially it came down. And the reason why it came up was that I had forgot to look at the forecast for the CPI. The CPI right here that came out Tuesday of this week was released on Friday of last week. So on Friday, on November 10th, these expectation number comes out. So these expectation numbers are very important going forward. And it came out a lot lower than expectation, or a lot lower than last week. The expected data came out a lot lower than last month. 3.3 versus 3.7, 0.1 versus 0.4. The actual results came in even lower than expected. Okay, this was a surprise, and I was saying on the weekend of the last weekend video that whatever the results for the CPI is, if they beat expectation, is going to skyrocket it, and that's exactly what happened. Of course, since the CPI beat expectation and beat the previous month, 3.2 versus 3.7, the PPI is going to follow. The PPI came in 2.4 versus 2.7, beating expectation substantially. Right, both the cores come in at 0.1 on the core is right here 2.4. I'm sorry, that's the core. The actual PPI is this guy right here 1.3. So regardless, our the number came in much lighter than expectation, or much better than expectation, and much better than the previous month. So this is the reason for all the run up, right? Well, partially, right? It's also because of the 10-year bonds. And the 10 years bond went to the max at 5, like I said, came to the max at 5 and corrected down to this level of significant. When it reached 5, when it was like during this point right here, right? I was saying, well, why couldn't it get to 5? I said exactly, why couldn't it get to 5? It probably get to 5. The problem that I had was, of course, when it got to 5, I wasn't thinking that it was gonna go get down to these levels, but you know, it did. Look at it. It went down to the 50-day moving average, then now it's down to the 200-day moving average. So it's at a significant level and bounced up a little bit. So we're at a technical point where potentially it could be going back up on the bonds. And if it's going back up on the bonds, obviously that's going to be lower for the stock market. So is this a significant level? On the weekly, we're at something. I'm not saying it's a level that is, you know, really, really strong on the weekly. On the monthly, we're back to this level pretty much. So there's a potential. Now, the MACD obviously you can say, well, this is green for the month, it's going to continue green. Who knows, right? It's flat. Obviously you can see it's been flat. And what I was saying on Friday was when the number came out on Friday, which was Friday the 17th. Okay, what came out on Friday on the 17th was this data right here. The expectation. So the 5 years Michigan expectation, I think that's the same as this probably. Most likely it is. So you can see right there. You can see it's going higher, 3.2, right? And I'm pretty sure that's going to be the same one. Yeah, 3.2. Michigan 5 years inflation expectation. Michigan 5 years inflation expectation. So the forecast came out on Friday, um, showing higher data, 3.2, 4.4. In fact, I think the expectation is plotted. So the expectation is already plotted into the chart you see here. That's a pretty high number. So I was thinking because this was like the opposite of what happened on the last Friday, where the CPI expectation was released on that Friday right here, right? Where where I lost money right here on the 10th. I was basing it off of this number and forgot to check the expectation. Well, I checked the expectation this time around, and this is the reason why I was bearish on Friday. So I was bearish on Friday. I'm still holding a long-term call options that are sold, but during the intraday, I was trading on the bearish side, right? So even though it pretty much went up, I didn't really, I mean, I didn't lose money. Obviously, I could have made more money if I was bearish, but whatever, right? So the technical did not align with my forward-looking data, but it didn't also like break out and went substantially higher. So it's still what I would say right now is a flat, right? Right now it's still looking like a flat and potentially I don't know a lot. I mean, I'm still leaning bearish. Um, for the reason why, because of this inflation number that came out right here, and also the consumer sentiment came out to be lower. The expectation is lower than the previous. So there you have it. It's going to be. I mean, on this number alone, it's going to be bearish forward looking. So Monday pretty much have no data, so it's gonna be technical Monday, pretty much a flat Monday more or less. Maybe afternoon probably gonna be a correction, so we may have a higher Monday, maybe testing higher level, maybe up here. Yeah, the ES kind of went back down, so I'm probably flat on my call option that I sold a few days ago. Probably I sold it on Thursday, I believe. So Monday it should be, down and then probably up. So the V theme, I was talking about the V theme of being recently. You can see all the V, right? You can see V, 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 V. So the V theme is still continuing. I expect technical Monday to be another V. So on the short term horizon or on the intraday horizon, it's going to be somewhat what you see on Friday, even though Friday is option expiration, and a lot of time the setup on Fridays really not difficult to predict. However, this Friday was pretty obvious, or I mean, it was relatively easy. Behaved somewhat technical. You can see bouncing off of that level. It deviated around the QQQ technical is deviated, but the SPY stay within relative technicality. Expect Monday to be down based on the futures of what I'm seeing right here, and but initial downturn, something like this maybe, or like this, and then a V. So I'm expecting more V signature. By the afternoon, I'm expecting it's gonna start going down, more of a straight line because of these existing home sales, which I'm thinking is probably gonna be lower than expectation, and the Fed minutes which comes out at 2 p.m. Eastern Time, 1400. This meeting minutes is probably going to be interpreted bearish. I don't know why it's going to be interpreted bearish, but that's just my expectation. And then on Wednesday, this is when the data is also going to be negative. So now you're having Tuesday Fed minutes, which is bearish, and you have the jobless claims, which I think the previous jobless claim, yes, the previous jobless claim, or the latest jobless claim was better than, yeah, so it was higher than expectation, right? So this is last week. Um, so the trend you can clearly see is going higher, but I'm thinking this is going to break the trend. And the reason why I think it's going to break the trend on this jobless numbers, because I'm continuing to look forward on the seasonality of Black Friday and the holiday, the Christmas shopping holiday. So the initial jobless claims are not going to be as high as what we're thinking. due to the seasonality. So this is maybe potentially going to come in lower than expectation. 225K. Um, this is right now 1800. So the prediction is higher than. Oh, wow, the prediction is pretty high. This is 1865 jobless claim, and here is 225. Okay, so but I think it's gonna beat this number, right? So the forecast came out, and maybe because this forecast came out on Friday, that was the reason why the day was positive despite the CPI, because we keep forgetting about the dual mandate, right? We keep looking at this inflation number and thinking the Feds are going, I mean, the investors are reacting solely on the inflation numbers, consumer expectation number, or sentiment number. But we forgot about the initial jobless claims. I don't know if I saw this or not, but I didn't realize this number is higher than previous. I don't know, it says 237 on the previous. So maybe they didn't plot the previous yet. So it's kind of strange. But anyway, scratch that. Not sure why the number hasn't been updated, but this is lower than expectation, so that's a negative. So whatever. Right, forward looking, like I said, there's still three components to trading: technical analysis, forward looking analysis, and fundamental. And I think the fundamental is the other thing I didn't realize, but I think already in May, right? Let's plot this. Let's take a look at some of these. When does it start shifting toward a shift? July is when we start shifting toward a higher. What the heck am I looking at here? So right now it's 525. So the expectation for lower rates, here it is. June, May. Okay, already in May of next year. Huh. Already in May of next year, May 2024, the data is already suggesting, this is 500, that we have a rate cut, right? So it went up to 60%. Right there, you can clearly see it has trended up to 60%. The Fed fund rate is 60% probability higher than the current Fed fund rate of 525. So 5 starting May 2024. That's pretty early. That's like barely after first quarter. We're expecting lower rates. I don't see how they're thinking that. I mean, with inflation at 3%, but that's what the expectation, and that's what they're predicting. So yeah, so it switched on me. But again, right, even if you look at these plots, right, even if you look at these plots right here of, you can say it's so easy, but at the time you really don't know if it goes up or down. Like, I didn't know it was going to go up. I might have should have predicted it based on the technicality of it. Like right here, it was at 5, and I should have predicted the technicality of. And this is where technical analysis is pretty strong. Meaning, I could have saw this uh, expectation that it was going to correct and go toward this 200-day moving average on the 10-year, reflecting that with the plot that we see here on the Fed fund rates going up towards 60% probability. So that is why I missed. I mean, that's why pretty much I'm still disappointed on this. Why I missed it. Uh, Much lost potential. Flat. So on these flat days, you're not gonna make much money. You can trade it and take, whatever you can take out of these trading. Same with expectation coming up, which is technical Monday, right? Well, where's this one? Yeah. So coming up, technical Monday. Afternoon should be down. Tuesday should start out, whatever it start out, eventually when the Fed Fund FOMC minutes of release going to be negative. Same with Wednesday, going to be negative, and then Thursday and Friday, I'm not sure yet. Yeah, not sure, but that is what I'm seeing. So I am seeing, for looking, a retest of 4.2, or I'm sorry, 4. This blue line, 4.6. So retest of 4.6 on the 10-year, a correction next week, and this monthly candle will probably go back to this level right here. So we're talking about 4,400 to meet up with this 5-month moving average on the monthly. So yeah, that is what I'm seeing for next week.